Everyone and their niece's nephew's second cousin has been so focused on Bitcoin's ETF run and the meme coin mania that they kind of forget about Ethereum. But now, ETH is waking up fast. With price blasting past that $3,700 mark, institutional interest is picking up once again, and that fresh retail momentum, it is starting to finally return. Ethereum's comeback narrative is gaining real traction once again, and some analysts are now openly saying it could hit $10,000 in 2025. So, buckle up. Welcome back to another episode of JRNY TV. My name is Nick, and this is where we break down what's actually happening in the markets, not just the headlines. And today we are looking at why Ethereum or ETH might be the single most important asset that you're going to hold or want to hold in the next leg of this bull run. We're going to take some time to dive into what ETH really is, why it's lagged behind in this cycle, and why that is probably about to change. Plus, we're going to take some time to look at the numbers, the interest, and the predictions that have people calling for a 3x or more by 2025. Next up, we will rewind and talk about what Ethereum actually is and why it still holds top tier status in any serious 2025 portfolio. What is Ethereum and why it's a must hold for 2025? Let's get something straight. ETH isn't just another altcoin. It's the backbone of Web3. It's the foundation of DeFi. It is the reason we have NFTs, smart contracts, decentralized exchanges, DAOs, you name it. And while narratives might shift and trends come and go, Ethereum has managed to remain the most important layer 1 blockchain in the entire ecosystem. That's not opinion, that is infrastructure. At its core, ETH or Ethereum is a decentralized world computer. It allows developers to build apps, launch tokens, and run code on-chain trustlessly. And after the merge, it now runs on proof of stake, which cuts its energy usage by 99% and sets the stage for ETH to become a more sustainable, scalable, and institution-friendly asset. Every single time you interact with a DeFi platform or mint an NFT on the Ethereum network, ETH is being used in the background. It's not just a token, it's the fuel. And when you zoom out, Ethereum has something very few assets in crypto have: sticky developer loyalty, battle-tested code, and unmatched network effects. That's exactly why, with all the newer chains flying around, Ethereum still commands the largest total value locked, the most developer activity, and the most widely adopted infrastructure across Web3 today. If you're building a serious crypto portfolio in 2025 and you do not have ETH in it, you're basically trying to play the game without the main character. Why ETH has lagged behind this cycle and why that's about to flip. Here is the transparency. All right, the cold hard truth. Ethereum hasn't led this cycle the way it usually does. In the past bull runs, ETH was right up there with Bitcoin, sometimes even front-running the altcoin boom. But this time, it's been kind of quiet. Bitcoin, it got the spotlight with ETF approvals. Solana grabbed the attention with meme coins. And ETH, well, it just kind of sat there, moving slower than expected. But do not mistake silence for weakness, because this lag might actually be the setup. ETH has been overshadowed, for sure. But the fundamentals have not gone anywhere at all. And now the dynamic, it's shifting. The regulatory clarity from the US, especially the Clarity Act, has now opened the door for Ethereum-based assets to hit the market. Spot ETH ETFs, they are already pulling in billions. And we are seeing institutional demand spike very hard over the last few weeks, right as ETH finally starts to catch a bid. This is not a sympathy pump, it's a rotation. So get ready for it. Smart money is moving in. Retail is warming back up to Ethereum, and while the other altcoins may have had their fun early in this cycle, ETH, it looks like it is now gearing up for the main event. Historically, when Ethereum lags and then breaks out, it runs hard. And based on what we've seen in volume, inflows, and on-chain activity, that moment may be right around the corner. Ethereum blasts past that $3,700 mark, and here's why it is just getting started. So let's get into it. Let's talk about the move. Ethereum just broke above $3,700, and it wasn't some low volume fluke. This was a legit breakout that was fueled by one thing: big money now stepping in. Institutional inflows, they're now stacking up, fast thanks to the newly approved ETH spot ETFs, and spot interest in ETH derivatives just hit an all-time high of $46 billion. That's not retail playing around. That is big, smart money now loading up. But here's the part that people are sleeping on. Retail is coming back as well. Google trends for Ethereum are spiking. Exchange signups, they're climbing again. Oh, and social media chatter? it's cooking. According to the data from Crypto.com's latest research, retail interest in crypto is up 30% quarter over quarter, and expert analysts now believe Ethereum-based assets will soon lead that way. That means demand isn't just institutional, it is everywhere. And then when you layer all that on top of the regulatory clarity from the Clarity Act and a supply crunch caused by ETH's burn mechanism, you start to realize this is not a temporary pop. It is a foundational run. ETH is moving again, and this time it is not dragging its feet. All the pieces are coming together for the perfect storm. Inflows, narrative, regulatory tailwinds, and on-chain strength. And if this momentum keeps building, $3,700 is just a checkpoint, not the destination. The $10,000 Ethereum prediction, is it actually realistic? All right, let's address the headline, the pink elephant in the room. $10,000 Ethereum. Sounds crazy? Some would definitely say that. But here's the thing. Major analysts are not laughing at that number anymore. In fact, they're publishing it. Standard Chartered, yeah, they just released a report projecting ETH hitting $8,000 to $12,000 by 2025, citing institutional adoption, ETF inflows, and Ethereum's transition into a yield-bearing digital asset as the primary drivers. Even VanEck, who just launched their spot ETH ETF, is on record saying that ETH has a multi-trillion-dollar upside as the backbone of digital asset infrastructure. And when you break it down, Ethereum at $10,000 actually makes sense. ETH's supply is shrinking thanks to the burn. Demand is rising through ETFs and staking. Ethereum continues to dominate in total locked value. And with more real-world applications currently being built on it than any other chain, well, that speaks for itself. That's not just hype, that is utility. Add in the fact that macro conditions are now shifting positive. Interest rates are stabilizing, regulation finally catching up, and retail coming back into space. You've got yourself a recipe for a very serious bull run. The next leg of this market isn't just about the memes or the hype. It is about the infrastructure. And Ethereum is the infrastructure. So yeah, $10,000 might have sounded like a moonshot a few months ago, but now it's starting to sound like a very serious, viable target. Ethereum's next chapter is already in motion. So here we are. After months of moving slow and staying quiet, Ethereum is finally flipping the script. It's blasting past that $3,700 mark. Institutions are piling in. Retail interest is climbing. And now the same analysts who once called Ethereum too slow are now eyeing it for a $10,000 price target with a straight face. This isn't just a bounce. This is in fact a narrative shift. So we've got regulatory clarity in the US, record-breaking ETF inflows, and the kind of momentum that only shows up when the market is gearing up for something big. ETH isn't just playing catch-up. It is setting the tone for what comes next. So whether you're already holding or you're sitting on the sidelines, just know this. ETH is moving. The cycle's heating up. In the next few months, they're gonna be wild. As always, this is JRNY TV. We're gonna keep breaking it down while the rest of the world catches up. Thanks for watching. We will catch you in the next one.